It's certainly what we're seeing across all markets is year-end positioning, so we have to be careful not to read too much long-term trends into that. Back to winning ways, well, I think one has to be a little bit careful. I think it's back to fundamentals. I think we've had a lot of momentum. India, obviously, in the first half of the year had a tremendous performance. It's still one of the best performing markets out there, but most of the performance was done in the first 6 months. The last 3 to 6 months, it's been reasonably flat, as you know, and it's really China that's taken off and done its 30% in the last 6 months. So it's almost like the baton has been passed on from India to China. But I have to say, when we look at that famous acronym of BRICS, I think the B and the R, Brazil and Russia, as effectively raw material energy producers, are going to struggle, whereas the I and the C, the consumers, India and China, are in a much better position as a result of what we've seen develop over the last 6 months in commodities. But it's not all plain sailing, and the big worry, I would say, which is why I'd agree with your previous speaker talking about markets going in two different directions, is we must watch the dollar. If you've got a lot of dollar debt wherever you are going to have a pretty tough 2015 unless you can restructure that. And that's something I think we need to watch very, very carefully at the stock level. Yeah, India, it's good for India. What's been very sensible, I mean, the whole India story, let's get this clear, is about reform. It's about Modi and his ability to do the reforms, and the markets have backed that, just in the way they backed Abiy in the first year with his Abenomics. Market got very excited, and a little bit of caution, as we saw in Japan, sort of travelling and arriving. Everybody got very excited in the first year of Japan, and everybody said it was going to keep going, and it actually backed off a bit as people took stock. I suspect the same might happen with the Indian market in 2015, but the really good thing is he took opportunity to take away those subsidies on energy and even to put some tax on, and that actually is quite a good thing because it sorts out the government deficit to some extent, which is good for the bond markets. But secondly, by having a tax wedge in between the amount you pay for your gasoline and the amount that the crude oil costs, as we have in Europe, for example, it means that the consumer is less sensitive to changes in the dollar or in the oil price should it go back in the other direction. So definitely as an energy consumer and importer, it's positive for India, and we like the fact that the government has taken the opportunity to remove what's been a long-term structural problem for the government finances, which was those oil subsidies. So yes, definitely positive, but again, the market has priced a lot of that in there already.